Hi all, this is Dr. J at 11, streaming live from Long Island, New York, where the weather is crisp, cold, and clear, just like on Wall Street, nice and cold. But there's a thaw around the corner, says me. Santa Claus was seen on the corner of Wall and Broad, and rumor has it that he's going to show up and be very nice to traders tomorrow, Friday, and into the new year. So Santa Claus has a present for all of us in the form of an end to this downslide. Now, will it be just a relief rally or will it be more than that? I'm not sure, but I'm betting on a boom, ba stock market that takes us to highs above 30,000 in the Dow Jones Industrial Average. I have reasons why. I've been thinking about this, and it seems like the Dow, Amazon, Apple, the three of the stocks that I've been charting, all have reasons to have hit their bottoms today. And I'll share with you those reasons, as well as J&J is very close to its trend line. I think it's going to bottom tomorrow. So here goes. Do your own due diligence. As always, my opinions are strictly my own and do not constitute investment advice. Seek the advice of an investment advisor if you choose to follow any of my ideas. Some of them are quite good, some of them are quite lousy. I've had some amazing calls, I've had some rotten calls. I think tomorrow will be one of my amazing calls. By the way, shout out to Russ. I'm kind of in agreement with his sentiment. All right, here goes. Here goes. Let's share the, trying to get to the share screen, and my mouse is not cooperating. Oh, by the way, another thing, just a reminder to like us. There's a button, a little button below the lower right portion of the screen. Hit that like button for me, please. And also subscribe if you haven't already. I much appreciate that. And I'm giving you an early Christmas present, maybe as early as tomorrow. Let's get a look at it. I will show you why. Okay. All right, let's get right to the Dow Jones Industrial Averages. Now, the Dow Jones, it made a new low today at a very interesting spot. I drew this lower trend line to show a double bottom here from 4/2/2018 and 2/9/2018. And it extends all the way back to last November, over a year ago. So this is a very key level, this 23,322 level. Guess where the Dow closed at? You guessed it, 23,323. So let's take a look at the latest part of the chart. I got to slide over. Get back into the current picture. I did a lot of sliding, didn't I? Okay, here we go. All right, so this is a beautiful place for the Dow to end. Now, the other factor is the Elliott Wave gurus from Atlanta. You know who they are. They're characterizing this is a 5-wave down with a 1-wave, a tiny little 2-wave, a 3-wave, a 4-wave, and a 5-wave. That doesn't look good to me. I just don't see that short, a 2-wave. I don't see that short a 3-wave or a 4-wave. I don't like the whole picture. It smells. Furthermore, in order to give a wave 2 up, they had to go to A, B, C flat correction that falls short, which is unusual. And it just doesn't look right in that as a second wave. Second waves are usually zigzags, not unusual looking flats. So they had to do a lot of contrivances to get their picture of a downward market. Furthermore, what are they saying now? That this is wave 1 down, this is wave 2 up, and we're in wave 3 down. I mean, that part is possible, but it's also possible that we have a double zigzag, zigzag 1, zigzag 2, maybe a triple zigzag at that. In any event, it could be some unusual wave 4 wave down, like a triple zigzag or something of that nature. I mean, I'm not an Elliott wave guru, but I don't completely like their explanation of the wave structure. It's curiously odd to me. So I would buy a triple zigzag just as well, which would set up for a rally just around now that would take us above the 10.3 all-time high. So I'm thinking that's where we're going. I'm thinking this is a very logical place to stop. And we just maybe we go a little lower tomorrow and turn it around with a tremendous up day signaling the end of the downturn. So in that case, it will have been a correction, not a bear market. And I'm thinking it is nothing more than a steep correction, the steepest we've had. And ending December on a positive note will really give us momentum going into the new year for a continuation of this so-called, people are going to be characterizing it as a relief rally. I think it'll be more than that. But we'll see, and we'll see if I have it nailed exactly right as beginning tomorrow. I mean, it could begin Friday. It could begin sometime next week. But we're very, very, very close to the end of this segment of the downturn. So a lot of stocks are becoming oversold, etc. Let's look at, in order, Johnson & Johnson. As you know, I'm very annoyed with the boys from J&J for possibly knowing about the dangers of the baby powder with talcum that they were selling, possibly knowing that it contained asbestos. They lost an appeal of a lawsuit filed by 22 women linking their talcum powder to ovarian cancer. So that's a bad thing for J&J. Yet it's had a tremendous downslide. Yesterday, I said, big deal, it's up. And I said that in my class, lesson 2. I said, big deal, it's up a point today, or 2 points, whatever, 1%. Tomorrow it'll be back down to the trend line. And look, it just missed the trend line. I think tomorrow it touches the trend line and then turns around and rallies. I don't think it'll go to that 120 level that I was originally calling for and maybe hoping for. I am annoyed at J&J. But I'm not annoyed at the shareholders, so enough damage has been done. And if you're thinking of getting in, it looks to me like tomorrow might be a good time, maybe. athx has nothing to do with the broad picture that I'm outlining of the market rebound. but it is my largest biotech holding, and I'm getting killed once again. And the reason I'm getting killed is there's been delay after delay in several key agenda items for athx. One of them being a China deal with its partner Helios. But they are receiving $2 million for a 6-month extension and up to $5 million for a year extension. And I'm not overly concerned about that delay. What I am a little concerned about is any delays that may be occurring in the clinical trial itself, in the Treasure clinical trial. We're looking at milestones after 3 months and after a year. It takes a long time to analyze the data. So it won't be probably until 2020 till we start seeing data readouts. So I don't want delays in that. I think that's why we had to sell off below it's very, very long trend line of between $1.80 and $2.10. So we broke that $1.80. I should have sold. I should have known better, but I held on, and now I'm holding on for dear life because I feel it's a great long-term investment, and I'm not looking to fool around with selling. I'm looking to buy back lower. I'll just keep adding probably, unless something fundamental changes my mind about the fundamentals. So in this case, I'm kind of throwing out the chart and buying because I like the fundamentals. I like the prospect of multi-stem. I think it will prove to be a winner in Japan and eventually in the United States. So it's just a question of time, and I think time ultimately will prove to be on Gil Van Brocklin's side. And I am a very big advocate of the CEO, Mr. Van Brocklin. I think he's a fabulous CEO. I have every confidence in his leadership, and he's undergone a lot of verbal attack, written attack in the bulletin boards, in the stock twits, in Twitter, but I'm solidly behind him. I do not want to see any change in management. I have every confidence in the CEO here. I know I'm getting a little off topic with this, so I'm going to move on. Let me just show you the break below the 180. This is a sort of vicious 1, 2, 3, 4, 5, 6-day decline that took us from $2.15 all the way down to $1. Let's see, $1.50, $1.47, with a close at $1.51 today. Well, at least it didn't close at the absolute low of the day. I think it too will bounce back. I want to see it bounce back above this 166 level, where it had some support the day before, but not today. So that's the story of athx. Amazon is the happiest story in my mind. I think there's a green light to buy athx. I think we're setting up very nicely with a head and shoulders type pattern where you have the head here, you have the reverse head and shoulders, shoulder here, and neckline here. So that would give us a distance of about 350 points, I think, 1,800 to 1,500, or whatever it is, maybe 340, 350, something like that. So if you add that to the top of 1,800, you get over 2,100. So I think it's very possible that we will get a pattern that actually works. and then we will break 2050, regardless of the head and shoulder. I generally don't like head and shoulders patterns. They half the time they work, half the time they don't. But if this one works, and I think it will, then it coincides with my theory of the Dow, and we will go to new highs, just like we will with the Dow. And maybe at around the same time, considering, is this October 3rd? Let's see. I think it topped at October 3rd as well, September 4th. Let's see what this date is. October 1. All right, it's a little different than the Dow, but I think it's going to break that 2050 September high. Apple also stopped at an ideal place today. If you look at the lows of back in April 26th, around that, and even further, I believe. Yeah, if you go all the way back to this low, April 2018, we have support right at where it stopped, 150. Let's see what the low is. The low is 160.63. We closed 160.89. Let's go back to the latest. 160.63 was the low. What was the low today? Oh, come on. A little lower, nothing serious. But we closed above that point. I think Apple is in an ideal situation, as well as Amazon, as well as the Dow, to welcome Santa Claus tomorrow and give its investors a much needed rebound of, let's say, it lost 3 points today, percent. I think we get back 4% tomorrow on Apple, and eventually start taking out some of these lower highs and start making higher highs, beginning with this one on 12/13 of 172.57. That once that high is out of the way, I think there's no stopping this. This will be a big rally back, maybe to new highs, maybe not, but it will be a huge rally with Apple buying back shares and so on. China, I think, is a non-factor. So we'll see what happens going forward. But Dr. J is thinking end of correction, no bear market. One of the reasons is, besides my charts that I'm looking at, is the fact that everybody and their brother on Wall Street is saying we're just a few weeks away from the bear or something of that nature. When everybody starts screaming bear market, it's usually time to start buying. So I'm in agreement with you, Russ. I think we get a rally here. Whether it's more than a relief rally or not is unclear, but I think it'll be more than that. I think it will be a very big rally back to new highs, and over several months. I don't know how many months, but let's say 3 months, January, February, March. And then look out below. Eventually we must go down, but I still don't think the stock market top has been put in just yet. There's a lot of cash on the sidelines, and there's a lot of people waiting to come in. And I'm beginning to see that money coming in. So people I even know who sat for a long time are now committing funds, thinking that the correction is coming to an end, and hopefully their thinking is correct. So I'm thinking it's time to say goodnight on an optimistic note. Please subscribe, tell your friends about us. Please hit that like button, write some comments. What else? Share the link so others can see my brilliant call. You want it to be right. I know you do. Adios, amigos. This has been Dr. J streaming live from Long Island, New York. Don't forget to watch my class on stock charting. Lesson 2 is in yesterday. Next week will be lesson 3. I think you'll find it interesting. I ad-lib my lessons as I ad-lib my videos, so occasionally I make mistakes in them. Any mistakes that I have, I'll go over and correct on Monday or Tuesday of next week. And I'll see you for that class. And I'll see you, if not tomorrow, I'll see you for my weekly wrap on Friday. Adios. Ciao.